Hey everybody, Boris, let's begin Forex. Welcome to the weekly technicals for the commodity dollars for Aussie dollar, dollar CAD, and Kiwi dollar, June 17, June 21, 2019. And the story in the COM dollar land was really sort of the anti-dollar story, front of the week, and then a pro-dollar story end of the week, in the sense that the dollar rally really hurt the COM dollars, especially the Antipodeans. Kiwi started to fall away by Wednesday. Aussies, fell hard by Thursday, and then finally even Caddy caught up and started to decline. All of this, I think, on the idea that maybe the market is feeling not as bearish on the U.S. rates as they were before. Remember, the market had priced in such a massive decline in the U.S. curve of almost 50 basis points before the end of the year. That was obviously beneficial to both Aussie and Kiwi on interest rate differential, and now those flows are kind of unwinding the other way. And that may be the story as we walk into the week, especially because, of course, the Fed is going to be the big story. We also have just a tiny smattering of data out of the COM dollar land. We'll take a look at that in just 1 second, but let's take a look at the levels. So there were some very key levels that are starting to get tested and perhaps could even be broken. So Aussie dropped from the 70.69 now down to the 69.68, and that 68 is a very key support level. That goes, it opens up a run to a much wider, deeper decline. Caddy's still on a relative basis the strongest of all of them, but Friday's action really was very negative for Caddy, positive dollar CAD. We moved all the way up to 134s. Although, as you'll see on the charts, one of the notorious things that Canada does is it will test the upper end of a prior range and then come back down against it. And I think that's probably going to be the story with the Canadian dollar. And then Kiwi just has been a disaster. It's really gotten very badly beaten up. I think on the fact that as Chinese tensions, and more importantly, not even the tensions between China and the U.S., it's the fact that Chinese demand is really starting to decline significantly. Chinese data last week, industrial production, with the exception of maybe retail sales, but all of the other data sets have been weaker than expected, really coming off that significant high sixes, high sevens growth that we're so used to now into the fives. And I think sort of like if you think about the 5% as kind of a 50 point line in the PMIs, that's a very interesting long-term development, that perhaps China is running out of growth, that that we're no longer in the age of a double-digit growth, and as we get closer to the global standard of growth, that's going to have a massive impact on Aussie and Kiwi in terms of not being able to benefit from that hyperbolic growth they used to have. So when you look at the calendar this week on the COM dollar land, as I said, very quiet. We've got performance index, we're bearish that because manufacturing really weakened significantly. I don't know if that's going to have a material impact on the Aussie. RBA minutes, nobody's expecting anything except the interesting thing here is we had the cut. The interesting thing here is if the minutes give an inkling as to whether the RBA wants to stay stationary really to the end of the year, or whether they're really open to even further cuts. That the discussion that will be avidly poured over is on what their future policy moves will be. So that could be an interesting impact for us as we go into the front of the week. And then there's nothing really on the calendar as we move. We get CPI out of Canada on Wednesday. That's actually bullish Canadian dollar. In some ways, because we had a little bit of a rise in IVPMI. Oil has been very supportive of Canada. I mean, I'm of all the commodity economies, I'm very supportive of Canada. I'm actually even more so supportive of Canada, given the tensions in the Strait of Hormuz. Sometimes those are just gamesmanship tensions, and generally they've always kind of petered out. But I think the simmering conflict between Iran and Saudi could get out of hand, and if you get a sort of a quasi warlike state in the Gulf, that just spikes oil to 80, and that's so bullish Canadian dollar that you kind of have to have a relative strength bet towards Canada until and unless that story dies out. And then we have New Zealand GDP. Here we're bearish also Canadian the Kiwi dollar, because trade really came back and stabilized, but retail sales were relatively weak, so we think that's going to be weaker. So there's just, in addition to the fact that we have price weakness this week, there's possibility here of event weakness as we go forward. And we finally end up with the Canadian retail sales, which here again, an anomaly on the COM dollar land, where we're actually bullish Canadian dollar because the retail sales have been better. So let's take a look at the charts, see how they're setting up. And there've been some major moves in the COM dollars. You see, look at the Aussie. The Aussie is literally filling the gap, and right there at the bottom of the move. Now, you know, it's going to be interesting to see if there's even an inkling of support here. I mean, certainly there's some technical support here, but do we get a chance to bounce here? That'll be an interesting look as we start the week. It's just been a one-way swan dive to the bottom here, and we'll have to see. Perhaps just maybe even some positive noises that Z and Trump are going to meet at the G20 at the end of the month would be enough to nudge this for a small retrace back up to the SMA. But for now, it's just a sort of a very negative power move to the downside. You got to be wary of it. Kiwi, same thing. Kiwi just did a really bad swan dive. Today, took out the SMA. Again, also sitting pretty much at support. So really, the two NTPDs are sitting at support. Kiwi has a little bit more support underneath there at around the 64.30 level. So there's just probably a little bit more of a buying bids over here. But overall, both of them made very sharp moves on the assumption that the dollar is essentially ascending again as interest rates begin to recalibrate. Ironically enough, you know, I'm looking at the yields here. It's not like the bond market is believing the dollar strength. The bond market is just essentially, we were 206 early this morning, and I was just thinking that maybe that was the sort of bottom, the absolute sentiment bottom for the near term. But you know, we haven't had a turn in U.S. yields to the downside, so that may provide a little bit of support here for Aussie and Kiwi just for a bounce back. But whatever moves we have here, I think they are just dead cat bounces against essentially a pretty strong downward trend here into the week. And then finally, here's the caddy, and it is a healthier chart than the others because you know it certainly had a much more powerful move to the downside. Now the retrace back, this is a typical CAD move where you have a big move to the downside, then a retrace back, and kind of a roll over at around the moving average, right? Which typically always coincides with the prior swing highs, swing lows. So if we follow the script here, it's feasible that we essentially have a move to 3450, 3475, but that whole 3450, 3500 going to be a very sticky line, especially, and this is the key thing, especially because the data should be supportive of Canada as we go into the week. So if the data is supportive, I think we'd probably have is just sort of a consolidated move over here and perhaps a roll back down a little bit to the downside. Of course, oil becomes the wild card in all of this. And if we start moving back up towards the 60, it should have a benefit to the Canadian dollar and pushes to the downside. So while we certainly look bullish in dollar CAD, don't get fooled. It's notorious for doing that, you know, the bullish move only to then kind of dissipate all of that energy and come back down and resume the downward trend. You have lots of examples of this, even in a modest example here, where you know you have a big move and then a 5-day dissipation of energy. You have a big move here, it doesn't even clear the SMA, comes back up. Big move here, dissipation of energy, and I kind of think it's really going to be the same story, especially since the funda seems to support much more that scenario than a pure V-shaped rebound and a move all the way up through the 36s. So that's how the week shapes up in the COM dollars. I wish you guys the best luck, the best trading. Boris Schlossberg, over and out.